All right. Can you guys hear me? My sound doesn't sound like I can hear myself. Hey, hello, test. Let's get a little testing going here. There we go. All right, technical difficulties right off the bat. Here we go. First thing in the morning. Not first thing in the morning. Last thing in the afternoon. All right. We're going to do a little day trading here today. See if we can't do a little scalping. And it's good to see everybody here. We got a nice little group following along. So I'm glad when people show up. It's always nice to have a few people here to play with. And we're going to look at the futures market, of course. It's kind of our specialty. We like to day trade in the futures market. And what we're day trading here today is, as you can see, the NASDAQ. And I've got very special charts pulled up. For those of you who have been here with me, you already know this little story. But right now, I'll just, for the new people, the charts that we're using, this is the NASDAQ out of the futures market. Now, I know a lot of people are like, what? The futures market? I thought the NASDAQ was out of out of New York. Well, no, this one here is out of Chicago. All right. If you were going to trade this one in New York, you'd be trading the QQQ. All right. So this is basically the QQQ, which is an exchange traded fund out of New York. But if you want to trade the NASDAQ, which is the NASDAQ 100 out of Chicago, there are no pattern day trading rules. You don't have to have $25,000 in your account to trade. And of course, you know, we always say $25,000, but you have to have actually more than that, because if you go one penny underneath, you're in trouble. So don't try and day trade the QQQ if you have less than something like, oh, I don't know, $30,000 in your account, maybe. Give yourself that little $5,000 buffer. And so, but in the futures market over in Chicago, you don't need that. And so you can trade all of these indexes. There's all kinds of fun things you can trade. Now, you can't trade IBM, you can't trade Google, you can't trade, you know, well, you can trade NASDAQ, can't trade things, individual stocks over here in the futures market. You can only trade the indexes, but we do have 4 of them. We have 4 indexes, and you can see in here a whole list of really fun things that we can trade. We can trade everything from the Aussie dollar, Bitcoin, live cattle, feeder cattle, Canadian dollar. There's corn. There's they've got Ethereum in here now. We got natural gas, gold, hogs, Japanese yen. You know, the commodities market. You've heard of this market. It's where we trade, you know, all kinds of fun things like gold and silver and soybeans and wheat. But it's got a lot more than just that. There's all kinds of fun things in here. There's the S&P 500 we can trade. We got the NASDAQ. We got the Dow. We got the Russell 2000. There's all kinds of indexes in here. And that's kind of my favorite. I kind of like to trade the indexes. And why? Well, I got a little Sunday school lesson for you here at the end of class. So don't run off early. You'll miss the Sunday school lesson. And so we got a little Sunday school lesson that talks about why we love the indexes over here in the futures market. And first of all, we have great leverage over here. All right. So it doesn't take a lot of money to make a small amount of money like it does in the stock market. It takes a large amount of money to make a small amount of money in the stock market because you have no leverage. In the futures market, it takes a small amount of money to make a large amount of money. Now, of course, anytime you have leverage and you can make a large amount of money with a small amount of money, it can go the other way around, right? You can lose a large amount of money with a small amount of money. So you have to be careful. And so we do what we say, you know, it's you've heard it a million times, cut your losers short and let your winners run. And that's especially important when you have high leverage like we have in the futures market. But I don't know how to trade the futures market. I don't know how to get started over there in Chicago at the Chicago Board of Trade or the Chicago Mercantile Exchange. What do I do to make that happen? What if I want to go trade over there? Well, you have to have a little special piece of software. That's all there is to it. It's no big deal. Just a special piece of software. And then you too can trade in Chicago. All right, here's just something to give you a little start right here real quick.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so that's it. If you want to trade in the Chicago market, you just have to have another piece of software that connects to the Chicago exchange. If you're trading the stock market, well, you have a version of software that connects to the New York exchange. Now, I know that there are some applications out there that try to connect to both, but don't do that. I mean, that's kind of like mixing chocolate with peanut butter. You know, don't mix my chocolate with my peanut butter. Okay, so don't do that. You want to, if you're going to trade in the futures market, you want a piece of software that was designed for the futures market. Now I know there's a lot of similarities, but there's enough differences that you really don't want to mix those two. You don't want to have a software program that was designed for the stock market and then say, oh, by the way, let's take a hunk of clay and stick it on here. Oh, now you can trade the futures market. No, don't do that. All right. There are enough differences that you don't want a piece of software that's trying to juggle the two differences. You're going to get all confused, and confusion causes losses. All right. So let's not have losses. Let's just stay focused on what we're trying to do. If you're going to trade in the futures market, just use a piece of software that's designed for the futures market. If you're going to trade the stock market, let's just focus on a piece of software that was designed to trade the stock market. The right tool for the right job. You've heard that your whole life. Let's just use the right tool for the right job. All right. Okay, so what you're looking up on here is you're looking at a very unique chart. All right, now this is a range bar chart. Actually, this one is not. This is a 1 minute chart. You can see over here I do have range bar charts. Let's talk about the 1 minute chart since it's up on the screen. But it's still a very unique chart in the sense that it is what we call Heikin-Ashi. All right, it's got a Heikin-Ashi price bars on there. So some of you have heard of Heikin-Ashi. Heikin-Ashi is just a way of smoothing. It's kind of like putting a mathematical model or like a moving average, right, into the price bars themselves. So rather than having a line over the top of the chart, like you see here, this little red line or the little green line, rather than having a line over the top of the chart to give you an average, we actually average out the price bars themselves. So they're kind of a unique style of price bar. Now I'm going to turn off Heikin-Ashi just so you can see the difference. This is what the market looks like without Heikin-Ashi. All right. And let's turn off some confusion here. We'll turn off the ATR. This is average true range. So that's what most traders are looking at. That's what they kind of see when they're trading. Now, to me, I kind of like Heikin-Ashi. It kind of helps smooth out those charts, helps me know where to put my stops, not quite so choppy. It smooths things out so I can stay in a trend a little bit longer. And I like that. So I like to turn that on. Now we'll turn it off sometimes. We'll turn it back on sometimes. You know, it's not like you have to always leave it on all the time. It's just an indicator. It's kind of like an indicator. And you can use it or not use it or turn it on and turn it off when it makes sense and when you need it. All right. So let's turn it off one more time just so you can see. See that trend up there? Got all kinds of red bars in there and everything, but yet the market's still going up. If you turn on Heikin-Ashi, it's just one great big long green bar, a green trend. And so that, you know, again, like I said, it just kind of smooths things out, makes it a little easier. I call it my cheat codes. All right. If you've ever played video games, you know that sometimes you can get cheat codes. You turn on the cheat codes and it's easier to win the game. And that's what this is, right? It's all just one great big carnival game that we're playing here. And so if we can turn on some cheat codes, I like that. Another cheat code that I like is the range bars. Now let's go over to the range bar 25. Now it's going to be a little bit different look. It's still the NASDAQ. This is the 1 minute chart. So each bar represents 1 minute time frame. So every minute, on the minute, you can see a little countdown timer right up here. See that? 21 seconds, 19 seconds, 18 seconds. See, let me make the chart a little bit bigger. All right. So you can see up there the countdown timer. That countdown timer is telling you when you're going to get your new bar. So see that big long bar right there? The market moved a long ways in 1 minute. And so we got 5 seconds, 4 seconds till we get a new bar. 3, 2, 1. There's your countdown. Boom. New bar. All right. So we get a new bar. Now, of course, we've got Heikin-Ashi turn on. Let's turn that off. So there's your new bar. All right. So that's how that works on a 1 minute chart. So what we're going to do is we're going to come in and we're going to go to a range bar chart. So let's click on that. And that last little piece right there, see that big long green move right there? If we go back over to the 1 minute chart, that's this move here. All right. So what we're going to do in here is we're going to look at this as a range bar chart. Now, range bar charts are a little bit more unique. You'll notice up here in the left-hand corner, there's no countdown timer. Why? Well, because we don't have time involved in a range bar. So a range bar chart only has the price movement. Now, this is a range bar 25. Now, what does that mean, range bar 25? Range bar 25 means that the market has what we call minimum moves. If you come over here to the key, you can see in the key, we have a minimum move. A tick or a minimum move is 1/4 or 25 cents or points per dollars. All right. On the NASDAQ index, this is worth $5. So the minimum move that a market can move is $5. So every time you see that thing click up or down, it's moving up, down, up $5, down $5, up $5, down $5, up $5, down $5. And that's the minimum move. That's the smallest increment that this market, which is called the NASDAQ mini. Now we have minis, we have micro minis, which are 10 times smaller. And then we have, the full size, which are 10 times bigger. All right, so we have markets that are really big, medium size, and very small. It's kind of like the three bears. We have baby bear, we have mama bear, and we have papa bear. All right, mostly we like to trade. Well, I was gonna say mostly we like to trade mama bear. We like to trade the minis, but that's not true necessarily. Some markets, very nice to trade the micro minis. All right, what we call the micros, and they're 10 times smaller. So rather than being $5, it would be 50 cents. All right. So that would be the each increment or the smallest move that the market could make. So if you want to trade the micro, switch down to the micro. And the way you do that is just by going and pulling it up in the software. You go to chart, you drop down here instead of going to the NASDAQ mini, you can see in here, you just pick the micro. So then it opens up a micro chart. So if we open up a micro chart, well, there's the micro chart. It should look almost identical. All right. The only difference is that the size of the amount of money that you're making, not the size of the trend. The trend should be exactly the same. The only difference is the amount of money that you're making. Now, the way they do that is not by flipping some switch and using the same chart. We use two different charts. So as you can see, I'm going to turn off this auto scale, and we're going to come in here. See range bar 25 micro, and we got range bar 25 mini. So if I come over here, I can almost probably even size it. You can see it looks almost identical, right? Almost identical. You can size it a little smaller. There we go. It's identical. Yeah, pretty much identical going between those two. So the only difference is if I draw a dollar calculator, how much money you'd make if you got in from the bottom up to the top. That's $84, all right, on the micro. Now, if we go to the mini, do the exact same thing. We draw our dollar calculator from the bottom to the top. That's $835, 10 times smaller. All right. And you're like, oh, man, $835. Oh, I love that. I'm going to make me some $835 trades. Well, that's true. You can, but remember, wherever you can make a lot of money, you can make a small amount of money. Well, Ann, I have a question for you. How much money did I have to put into the market to make that $835? What, $25,000, $35,000? That's what I'd have to put into the stock market to make that $835. So how much did I have to put into the futures market to make that? Well, you come over here to the key and you look, and it says day margin, since we're day trading here, day margin, $1,823. What? What are you trying to tell me? You don't have to put $25,000 in? No, you don't, because remember, I told you it takes a small amount of money because we have leverage. All right, small amount of money to make a large amount of money, but remember, you can also lose a large amount of money with a small amount of money. So the only amount of money you have to get into this position on one contract is $1,823. Now that's for the mini. Let's go over to the micro. Let's drop down here to the micro. Here's the micro. We go into the key. How much do we need? Day margin, $174. So that's why you don't need a $25,000 account to get started over here. We don't have no minimum moves like that or minimum requirements. You can open up the money. You can open up your account with $1,000, $2,000. And, they kind of like to have you start with $5,000. But, you can start if you promise to only stay in the micros. Well, Mr. Broker, I'm only going to stay in the micros. I promise. I won't go into those minis till I have $5,000. They'll let you open up your account with $2,000. Can you believe that? You can get started day trading in the futures market here in the United States, not even going out to some foreign brokerage firm or some foreign, organization that's a little shady. You don't want to do that. You don't want to be sending your money overseas so that you can get a better rate. Don't do that. All right, let's just stay here in the United States. Let's put our money into a firm that we trust, and let's go into, the Chicago Board of Trade, the Chicago Mercantile Exchange. Very reputable organizations. All right, so you can put your money over there, put a couple grand in, and away you go. And the way you open up your account, if you have Track and Trade, if you have the software,
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so that's the software that we're using right here. And all you do to open up your account is you just play with it in demo account. They give you 2 weeks where you can just play with it in your demo account. And then you come up here and you say open real account. And you click that little button right there, and it's just going to open up a website. It's going to take you over here, and you just fill out the information. The problem is it's too easy. It's just too easy. It's too easy to open up an account with the futures market and start trading. All right, so That's the name of the game. That's all you have to do. You open up your account, you send them a couple grand, and before long, boom, they turn on your account and you can start trading real money. But before that, they give you a demo account. So that's what we're in right now. We're in a demo account and we're just practicing and playing and we're learning how to trade. So just come back here to this website, join me, put your account in there, and just play on the demo account for a while until you feel comfortable with the software. Once you feel comfortable with the software, that's really what a demo account's for, is to learn the strategies and to learn the settings and learn the software. And once you get that all set up, boom, you can start trading real money. And so what we want to do when we start trading real money is we want to start to look at individual specific strategies for this type of trading. Now, for me, I like to do what I call scalp and trail. All right, scalp and trail. So I'm going to come over here, go into my trading tab, and you can see that I've got some buttons in here. This is the buy market button. This is the sell market button. If I think the market's going to go down, I can hit sell and make money on the way down. It looks like it's going down. You want to see if we can make money going down? You hit sell. And that's all you have to do. Now you'll make money if the market falls below your red line. If it turns around and starts to go back up, you start to lose money. Now we're in the micro, so we're not going to lose very much, but we're also not going to make very much. So it's a nice market to practice with, to be new in, all right? So the market's starting to go back up. We'll just wait here for a second. We want to cut our losers short and let our winners run. So if it starts to lose money, we're going to put in what we call a stop order, all right? And I'm going to come and just drop that in here. And with track and trade, you just drop these orders on the screen. There's no filling out little boxes that pop up, quantity this, type in the what order I'm doing. You don't do any of that because this is designed for day traders, designed for fast trading. And you just drag and drop these orders right on the screen. Come in here and say, well, if it comes up and breaks above that previous high, I'll just get out and take my small loss, all right? And then hope that the next winner pays for the small losses. That's the name of the game. The winners pay for the losers, but you got to keep the losers small. Don't let those losers get big, because if they get big, then it's harder for the winners to pay for them. So don't ever let those winners, I'll just sit in here and hold on to it till it turns around and comes back. No, don't ever do that. The market can stay irrational longer than you can stay liquid. All right. Especially if you've only got a $2,000 account. Hey, I mean, these markets can take $2,000 away, boom, like that. All right. So be careful. That's why we use stop orders. All right. Stop orders. That's a stop order indicating that if the market turns around and goes back up, it's going to stop me out, stop my losses. All right. If the market continues to fall, as you can see here, anything below the red line, that's going to be profit. And the farther it goes, the more I make. That's very simple, right? We're up $5 right now. That would be $50 in the bigger market, 10 times bigger, right? So if you say, I'm happy with $5. Okay. I'm happy. I want to take it off land. You just hit exit chart and you're out of the market. Well, there you go. All right. Now, we lost 50 cents on that one because the market actually came back above before I hit the button. But you can just let it sit here and go. In the interest of time, I took that off because I want to show you some other things before we jump in like that. So, all right, I'm just going to teach you a little bit in here. So now if you think the market's going to go up, you hit the buy market button. So let's say, we think the market's going to go up. You hit buy market. If you hit buy market, the market turns and starts to go up. Then you make money. You're like, well, wait a second, Lan. How do you make money if you hit sell first and the market goes down? Well, that's called shorting the market. You make money on the way down. All right. And so that is a way of making money on the way down. Now you're like, I don't know. It doesn't make sense to me. Well, then don't do it for now. In the beginning, it's a little bit hard to understand. But the only way you make money is to buy low and sell high. But in these markets, they let you sell high first, sell something you don't own, and then buy back low later. Now, I'm not going to try and explain the whole concept right now in this class. There's other lessons that I teach why that's a thing, why you can do that. But you can sell high and you can buy back low in the futures market. And you don't even have to borrow anything like you do in the stock market. You don't have to do anything like that. You don't have to borrow. You don't have to pay interest. You don't have to do any of that. There's kind of special reasons why you can do that over here in the futures market without any of those problems. All right. So here we're up $8. Let's go ahead. We'll hit exit chart. We'll be out of the market. We just made $8. All right. So it covered our 50-cent loss. We're now up $8. Now there's commissions and fees. And in the demo account, we don't know what your commissions and fees are going to be. So there are commissions and fees. And I'll go into just a little bit of a detail on that. When you trade the stock market, they say it's free trading, no commissions. That's not really true. All right. Behind the scenes, they actually charge you some money. You just don't see it. It's built into the price of what you're paying for your stock. All right. We don't do that over here in the futures market. In the futures market, we don't play those funny little games of, free commissions, no commissions, and then sneak it in somewhere. Because imagine, these companies can't operate for free, right? They have to make their money somewhere. So it's just, It's all marketing. They're just hiding it in the price of the stock. All right, you still pay your commission. But in the futures market, we don't do that. We don't hide the price in the stock, in the price of the underlying market. We just throw it out there and say, hey, this is your commission. This is what you're paying. All right. Now, if you trade a lot, you can get a smaller commission. If you don't trade very often, your commission is going to be a little bit bigger. And that sounds fair, right? And that's why we do it that way over here. We don't try and just hide it in the market. And then everybody has to pay the same amount. All right. Which you might think is a little bit more fair. But if you're one of those guys that trades a lot, well, it's not fair. I trade a lot and I have to pay the same commissions as that guy over there. Well, there are no commissions. Well, we know it's hidden in the price. So I am really paying a commission, and I pay the same commission as the guy that barely trades. So over here in the futures market, if you are one of these guys that trades a lot, I trade all the time. I'm a day trader. I play 20 times a day. You can call your broker and say, I want a better rate. And he'll say, oh, you deserve a better rate. And he'll give you a better price, something that the other guys aren't getting. All right. Now you can do that in the futures market when you become a more active trader. Can't do that in the stock market because everything's built right into the price because there's no commissions. All right. So that's how it works. There are commissions over here, but the reason they are here, it's pure, it's not there. We don't hide anything. All right. Pure transparency. Just if we're going to charge you something, you know it. All right. So that's the name of the game over here. Oh, look at that market still going up. We should have stayed in there longer, right? But we were learning. Now I want to show you something else. Let me show you something else a little clear. Let's get in. Let's go in here and hit buy again. We're going to put our stop in here. I'm going to show you another little really cool strategy. Let's say this market goes up a long ways. We can put a limit order in here. Let's say if it goes up and tests that previous high up there, we can just put an order in there to take us off right there and get us out. And that'll see how that'll stop us out. If we're wrong, it'll come down, stop us out, we'll take a small loss. But if we're right, it'll go up there and hit that one up there and take our profits. So you got a little dollar calculator in here. There's a limit order. See that how that'll make you $16 here in the micro. And if it loses, it'll lose $13. Okay, so that's how that works. So you got a limit order. You put that above, and that will take your profits if it hits that price level. It's got a stop order below, which will take you out of the market and cut your losers short, right? Cut your losers short. Let your winners run. Now, if you put a limit order in there, that's not really letting your losers run, is it? It's kind of cutting your losers short too. So what we can do is we say, well, I'll just go in with 2 markets. I go ahead and hit one more. Now I'm in with 2 contracts. I got one to take off there. I got one here. I can come in here and edit that and say, I want that to be 2. And now you got that 2. And now you got 2 trailing stops. Actually, that didn't change. Let's go ahead and put it in there ourselves. Just like this. We're going to go 2 like that. Okay, now we have 2, sell 2. Long 2, and we're only selling 1. If it comes up here, that would be what I call my scalp and trail. All right, scalp and trail. So what would happen is we would scalp one off. If it comes, and it's going to come down and stop us out. We'll see. Yep, it stopped us out. But if the market went up, okay, and didn't do it. If this market went up, it would have taken one off, and we'd have still had another one that we could have gone with it. And we could trail the stop up behind it to protect ourselves as it went up through hopefully a trend like this, right? We anticipate maybe another rise in price, but we're going to see if that market would trail. So it would scalp out of the first one, and then the second one could continue to run. That's called scalp and trail. All right. So out on the little marquee out front, when you walked in the theater, underneath the sign, right? The thumbnail. All right. The little thumbnail said scalp and trail. And that's the whole idea. We can scalp and trail. So let's go ahead and we'll exit the chart, get out of here. Let's delete our chart. We're going to come down. This market's moving a little bit slow. Let's come in and speed it up a little bit. How do we speed it up, Lan? Well, we just go to a smaller time frame. So we go to a range bar 18. Now we were on a range bar 25. We'll speed it up a little bit, see if we can get a little bit more action here by going down to a range bar 18. It's not very active. Let's go see if we can. Oh, look at that. A little bit better action in here. All it does is gives us more bars, right? So we got more bars to work with. Now you notice these little yellow dots. See those little yellow dots in there? Those little yellow dots are what we call the average true range. Now in track and trade, when you click on this little tile down here in the bottom right corner, now you can do it just by right-clicking on the chart and getting this overlay, and then it's right there too. But this is a quick button right here. It's a little ATR. You click on that and it brings up the settings over here. Now all the settings in track and trade are over here in this control panel. I'm one of these guys, I hate things to pop up over the screen. Now there's some things that you can't stop from doing that. It has to pop up over the screen in your software, but I hate it when it does it. So track and trade is great about trying to minimize that and doing as little of that type of stuff as possible. There's some things that have to pop up. That's why they call it Windows. If you've ever, heard that name of your software operating systems called Windows, the reason they call it Windows is because they pop all these stupid windows up in front of you. I hate that. So as much as we can possibly stop that, we put that over here in the right-hand corner. On this little control panel so that we don't have to have these windows always popping up in front of your chart and covering up things. I hate that. So anyway, that's the way this is set up in here. And you can see these little yellow dots in here. This is called the ATR, average true range. So if the market is above the average true range, then we anticipate or consider that's in a bullish trend. If it's below the average true range, it's in a bearish trend. If it's below the average true range, the price bars are red. If it's above the average true range, the price bars are green. Pretty simple stuff, right? I mean, again, this is a carnival game, and so this is how the game is played. And our game, the name of our game here in the carnival game is to get really good at determining where that little snaky thing's going to go. Whether it's going to go green and stay green, or whether it's going to go red and stay red, or whether it's going to go red, green, red, green, red, green. If it's going red, green, red, green, red, green, that's bad. That's not good. We don't like that. Why? Because it's really hard to make money if a market's just going red, green, red, green, red, green. So if it's going red, green, red, green, red, green, stay out. Don't trade. Wait till it starts to go green, 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 and then wait for it to give you a little tiny red bar like that. That's what we like. That's a buy signal. Once it gives you that little bar and your first green candle to break a new high, that's a buy. So get in, and ride that baby up until it crosses the yellow dots right there. Okay, so that's what you're looking for. Cross the red dots. Then in this case, because we're in the micro, that would have been $39. Now, if you'd have been in the mini, right, this is a little bit bigger, it would have been $390. Now, if you could make $390 a day, I don't know about you, but that'd be life-changing for many people. Now, our goal is to make $500 a day. All right, so we're going to kind of stick around and kind of do this until we make $500 a day, or in our case, we're in the power hour, which is the last hour of the day. It's going to close in 30 minutes. So can we make $500 in one day? Well, not in the micros. In the micro, our goal would be $50, right? If we could make $50 in the micros, that's the same as $500 in the mini. If we get good at trading the micro, and we can make $50 in the micro every single day, no problem, hands down. We're like, hey, I'm pretty good at this. I can make $50 very easily. Well, then you would flip over to the mini, do the exact same thing. Don't change a single thing. And instead of making $50, you'd be making $500. And $500, that would be life-changing for many people to be able to make $500 a day. All right. Now, some people come to me and they're like, Lamb, I'm not going to do this unless I can make $2,000 a day. If I can't make $2,000 a day, it ain't worth my time. All right. Well, the only thing I have to say to those guys is, you know what? Don't have unrealistic expectations. Let's say if you can make $50 first. All right. It's a skill. You have to practice. It's like playing a video game. How many of you guys ever played a video game? First time you grab that little controller and you start pushing it around and trying to figure out the buttons, you're not very good at that game. There's guys out there that can kick your ass, right? And so you're like getting killed all the time if you're playing those little online games. You're like, oh man, that guy just killed me. I can't even figure out how to load the gun. I can't even figure out how to move the car. I can't even figure out how to go down the road. What the hell is this? That's the way you're going to be when you start trading for the first time. You're going to be that guy. I can't even get the thing to move. You know, these guys are killing me all the time. But eventually you gain the skill and you start learning how to do this, and you can start to make money, and you can start to beat the other guys. This is a one-for-one market, meaning that the market, for every winner, there's a loser. For every loser, there's a winner, which means if you lost some money, that means somebody took your money. That means somebody made money. And you're like, well, if somebody took my money, I lost money. That's bad. No, that's good. Think about it, because there was one winner for every loser. That means if somebody lost you, that means somebody won. So if you can turn those tables, and instead of being the guy that's losing every time, you can take somebody else's money. You can be the winner. You can be the winner. All right. All it takes is that you have to have a little practice, and you have to get good at it. And the more you get good at it, the better you are. Then you can ramp up and you can start making that $2,000 a day if that's your goal. All right. If your goal is $2,000 a day, great. Set it as a goal. But don't come in here to me and say, well, Lan, if I can't make $2,000 the very first day, you're going to make me out. And if you can't make me make $2,000 a day, what the hell are you even doing? You know, have realistic expectations. Don't come in here with, chip on your shoulder and I'm going to make $2,000 a day. This is stupid. You got it. It's a game. It's a carnival game. You got to be able to throw the darts and hit the balloon. And I can't, just because I can throw the dart and hit the balloon doesn't mean you can throw the dart and hit the balloon unless you practice. All right. So can you make $2,000 a day? Yeah, you can. If you get good at throwing darts, man, you can make $2,000 a day, hands down. You can come in here to the mini chart. Let's come over here to the minis. Let's go into the range bar 25 on the minis, and let's draw a couple of dollar calculators. All right. Now, I want you to think about one up for every down, because there's one up for every down in this market, because we're working off of the ATR, the average true range. The average true range has one up for every down. So we have green trends, which are up. We have red trends, which are down. So for every time that little market switches back and forth, you have one up for every down. See that? One up, one down, one up, one down, one up, one down. Now, if we would have got in on this up and wrote it to that down, that was $400. If we'd have got in on this down and wrote it to that up, that was $320. Now remember, you can make money on the way down. You sell first and buy back low later. And then on the way up, you go up, that's a $355. If you'd have gone from here to here, that'd have been $265. If you'd gone from here to here, that'd have been $725. Could you make $2,000 in one day? If you're good at it and you follow the rules and you play the game properly, yeah, you could probably make $2,000 in a day. But our goal is going to be $500. All right, we're going to stick with the $500 day. Now look right here. If we'd have got in on that red arrow, that yellow arrow, and wrote it to where it's currently trading, that's $500. We'd have had our goal right there. All right. So the market's moving pretty good right now. So we should be trading instead of lecturing, but that's all right. You come here to learn. So this is a learning environment. This is a classroom. This is the lab for our university. I'm a school teacher, and so that's why I have this YouTube channel. I come in here. I don't go out and advertise and try and get 10 million people to come like other people. And this is just a laboratory for our university class. Now it's summertime, so we're on the summer schedule. So we only do the day trading once a week. When we're on the university class level in the fall and in the wintertime, when we're teaching class in universities in full swing, we do 2 days a week we do day trading, and then 3 days a week we come in and we go into the stock market and we trade options, and we do the universal basic income, right? We do long-term investing, and we do all kinds of really fun stuff. All right. So this is a fun class, but in the summertime, we're kind of on the summer schedule. We only do day trading once a week. We do this lecture, come in here and talk about the stock market, the futures market, and learn how to day trade once a week. That's every Wednesday at 1 o'clock in the afternoon. We trade just the last power hour, and we do a little bit of trading in here, and we try to teach this concept and this process. All right. And then if you want to join us for the stock market stuff, that's on during the summertime. It's on Tuesdays and Thursdays at 8 o'clock in the morning. All right. Now that's Mountain Standard Time. So if you're not in Utah, where the university is that I teach at Utah Tech University down in St. George, Southern Utah. And then, so all of our times that we do are in Utah time. So everything that, if you're not in Utah, you have to make your adjustments to your time zone so you can be here during the right time. So 8 o'clock Mountain Standard Time is when we join up to the markets on Tuesdays and Thursdays. So you can come and join us for that. And then we talk about the stock market. So today is Wednesday. So tomorrow morning at 8 o'clock in the morning, we'll have another class, and we'll be talking about the stock market. All right. So excited about that. And let's come in here, and I want to talk a little bit more about the ATR. Now I got the ATR turned on and really aggressive right now, and that's okay setting because the market's doing pretty well. All right, it's moving pretty good, but we can loosen that up. I'm going to bring that back out, and I'm going to come in here and delete all the drawing tools, and I'm going to come in here and I'm going to show you this ATR. All right, the ATR right here has a stop factor, and I've got that set to 0.5. That's very aggressive. Usually I'll start that at 1 and 1 right there, 1.1. All right. So if you got track and trade, you're going to notice that if you go to the TNT defaults, it's something totally different than what I use. All right. Go back to my defaults. I like to have it be yellow just because I like yellow better. All right. And then I have 1, and then I generally start this off at 1 and 1. And then if I want those dots to be closer, because those are a little bit farther away, so that means you're holding your stop back a little bit further, because that's where we're going to put our stop. We're going to trail our stop on that yellow dot, and I'm going to show you how to do that. But I like to make it a little closer when the market's being a little bit more aggressive. And today it's been pretty aggressive, so we can be somewhere down there 5 or 6. I'm going to put it on 6 for right now. And you can see that this market's starting to come down. Now we're going to do a little Fibonacci work here. For those of you who are familiar with Fibonacci, you can see that your market's come down like this. And so it's come down into the Fibonacci sweet spot, which is the one standard deviation. That's what Fibonacci is. All right. Fibonacci is measuring the standard deviation of the trend. So this is the one standard deviation. So the market has rallied up and come back into the one standard deviation, which is basically 50%. You got 38.2 up there, 61.8 down here. This is what I call this one standard deviation, or what I call the Fibonacci sweet spot. All right. So it come back down into the Fibonacci sweet spot. We got a little green bars in here and then another red bar. That's actually a sell signal indicating the market's showing weakness, and it might keep coming down, maybe hit 78.6, maybe even come down and break the 100% level. We don't know. All right. Nobody knows what the market's going to do. I don't know what the market's going to do. All I can do is read the colors of the trend and look at the little arrows and the little yellow dots. And then we can measure. It's what I call count, measure, setup, trigger, and follow through. All right. Count, measure, setup, trigger, and follow through. So what's the follow through? That's the getting into the market. That's getting out of the market. All right. Follow through is getting out using stop orders. Now I'm going to show you something really cool. Now we're going to get into some advanced stuff here. But before I do that, I want to do something just the next step up. Let's say that we get into this market. Let's say we think it's going to continue to go down. Now it's bouncing off of 61.8. It probably, I don't know if it's going to go down or not, but we got a little dot up there that's above. So I'm going to say it's going to go down. We're going to go in with one contract. We're going to hit sell. And this is the anticipation that we're going to continue down. Now, how do I put my stop in to trail in those little yellow dots? Well, I grab a stop, I bring it up here, and I can put it anywhere I want up here on the screen, just as long as it's above the little yellow dot. I drop it way up here. And now I'm going to come up here and I'm going to right click on it and say edit. Now that's where it pops up one of these stupid little boxes, but you know what? You have to do it. Sometimes windows just pop up on your screen. So we're going to come in here. We're going to tell it we're going to trail on the ATR, just like that right there, trail ATR, quantity one. We're going to hit OK. Now you'll notice it jumps immediately right to the little yellow dot. That means what it's going to do is it's going to automatically trail on that little dot all the way down until the market pops up and touches that little yellow dot and gets you out. Now, if it, you know, if you don't take your profits down here and it turns around and goes up and hits you, right now we're in a losing position, right? Why? Well, because the little yellow dot is above the red line, which is where we got into the market to a short position. So the market would have to come down here and the little yellow dot would have to continue to trail on a downtrend to come down and make the money. All right. If we'd have done this earlier up here, our little yellow dot would be following all the way down here and we'd be in good money. Right here, it's kind of waffling here at the 61.8 level. We might get stopped out again. Yep, we got stopped out. We're down $81. See that? That was a $81 loss. And so it come up and hit our little yellow dot. That's perfect example of what this is talking about. Now, you could also come in here. Let's do it again. Let's come in. Well, the little yellow dot's been violated. Let's see if I got to get another dot here. So the lesson has been stalled for a second. I don't think I can get it to trail on that yellow dot. Let's try it. I don't think. Edit, trail, ATR. Where it's been violated, I don't think it'll do it. No, see, it's going to sit there and wait for the next dot. That one's been violated, so I can't trail on it. So let's wait. I need to actually have my short position in here. We'll get that short position back in. If we get another yellow dot, you'll see as soon as it gives you a new yellow dot, this will jump to that yellow dot. All right, but that little yellow dot we got stopped out on, we got violated on. So is it going to go down anymore? It's kind of dying right there at 61.8, right there in the Fibonacci sweet spot, isn't it? So we're kind of not getting a much movement out of this market. It looks like it's going to bounce the 61.8 and start back up. So let's just try, let's play it that way. Let's wait for it to cross the little yellow dot, and then I'll show you how this works. But I want to show you the manual way. Then I want to show you, I've got buttons down here that are programmable buttons. Now, you don't have to write code, so don't get all scared and worried, oh, Lan, I don't know how to write code. You don't have to write code. They're programmable buttons, meaning we can tell them what we want the market to do just by pushing one button. And these buttons here are called quick custom orders, all right? And I call them OCO. This is a QCO, quick custom order, but it's OCO and OTO. One cancels other and one triggers other, all right? So we can put open orders. When that open order gets hit, it will trigger the other orders to do something. Now, I'll show you a little problem here. Let's come in here and say that I put in my order. Let's go long here. I'm going to put a stop order down here, and I'm going to put a limit order up here. Now, what happens if the market comes down and stops me out? Well, it leaves this order intact. It's still there, even though it's part of this strategy. Let's see if it's going to do it. Let's slide this up here, and I'll show you. Let's see if we can get stopped out here. The market's being a little sideways, so it should stop me out. Watch, it's going to hit my stop, maybe. There we go. But notice that the two orders went away. The entry order and my stop order went away, but my limit order is still up there. Now that's danger, danger, Will Robinson. Because if that's still up there and I went down and cooked eggs while I did that, the market could go up and hit that limit order. And then that would give me a short position and the market could fall. If it fell, it would make me money. But if it went up and hit the limit order and kept going, I'd lose money. I got an open order that's left over out there. All right. So you can't go to the grocery store and leave your order sitting there, because if something happens like what just happened, you get stopped out, closes out two positions, but it leaves that third one out there. I mean, some of you have had that experience, and it's a little bit of a struggle, because you're like, well, now I got to clean up my extracurricular activity here. So we're going to go in here, we're going to hit exit chart and get rid of that. So this little order button right here allows you to put both those on at the same time. But I'm going to show you guys a little trick. Now, some of you have been with me for a little while, and you might not know this little trick. Let me show you this little trick. All right, so we're going to come in here. I'm going to show you another little trick. We're going to come in and we're going to go like this. We're going to hit buy market. So we're in the market long. And now I'm going to show you how to put those two orders on there. See, now again, let me get rid of this. So I'm going to come in here and I'm going to show you that you have a stop order, again, manually placed like that, and a limit order like that. All right, so those are the two that we just had. I'm going to kill those. We're not going to do it that way. We're going to come in here and going to right click on the little tool on the screen. I'm going to say add OCO. So now look at that. I got two orders in there, a limit order and a stop order. They're connected together. And now I can move them up and down. Now I can click, I left click, and it sets them. All right, now I can come in here and say, okay, on this one, edit order, I want it to trail. Now this is an OCO, so I have to come down here, trail ATR. So I hit that, and now that's trailing on the little yellow dot. And now I got a limit order up here, and I can put that wherever I want. If I think the market's going to come up and make me some money, I can look at this. I'm down 271. I can come over here and say, well, let's put that just to get our money back. 271. I don't know if it's going to go up there, but that's 271. That would get us our money back if it would just hit that limit order. All right. So we could do that, or you could just slide this little limit order down here. Watch this, just for see if we can get it to fill. Oh, come on. Don't die on me now. I'm trying to give a demonstration. Come on. Okay, so it filled our limit order, but did you notice now it filled the limit order and all three orders disappeared, all three of them. So now what that means is you can come in here, you can go market order, right click, all right, add your OCO. You can come in here, you can go edit, turn on the ATR, so it's trailing on the ATR, put this limit order up here, and now you can go to the grocery store. Or you can go cook some eggs, or you can go to the bathroom, or you can do whatever you want, right? Because at this point, the computer's going to handle everything for you. If you get stopped out, it will automatically kill your limit order. If it hits the limit order and takes your profit, it's going to automatically kill your trailing stop, and it's going to get you out of the market. So that is a nice little tool that allows you to come in here and have more control, letting the software take care of things for you and clean up after you automatically. Now, I'm going to show you another little cool trick. All right, let's go ahead and take this off. So we're going to exit the chart. Making money there, so that was nice. Now what we're going to do is we're going to come in, and I've got these little programmable buttons, and you can see I've got lots of things programmed into these. Lots of different strategies that you can put in here. Some of them have more than others. Look at some of all these strategies. Look at this strategy here. Look at all those. I got lots of stop strategies. Those are lots of strategies. All right, you can put almost anything, and look at all those strategies I've got that I can show you and teach you and give you all this little fun stuff you can do. Right now, we're just using the 777 strategy, and I've got the 777 strategy set up on each one of the buttons. So they all kind of work together, do basically the same thing. So what we're doing with the 777 strategy, you'll notice this is a buy market. This one here is a sell market, but this one here is a stop order, and then this is a stop trail. Now, this one is a stop with a 100 stop and a limit of 100. Let's go and I'll show you the settings. So I'm going to right click on this button. I can say edit my 777, and this is the settings for the 777. So if you got a little one of these funny little things, I don't know if you guys carry these around with you, but most of you probably have one. Go ahead and open up the little camera tool and snap a picture of that, so you can, when you get your track and trade, you can put that in. Now this is my 777 strategy. I told you I'd show you my strategy, my scalp and trail strategy. That's it right there. All right, so that's the buy market one. You'll notice that we're going to buy market. We're going to attach a stop at 100, and we're going to attach a limit at 100. Now, the stop's not going to be 100 back, because it's going to immediately down here, see where it says trail price bars back? It's going to immediately, now when I do this on the Heikin-Ashi bars, I have all these little flat bottom bars, right? I love flat bottom bars. So I'm going to trail on the little flat bottom bars, and I can do that. and that's where I'm going to trail the price bars back. And this says 1.1, so it's one price bar, which is the flat bottom bar, plus one minimum move, which is that $5. And I do that for the spread between the buy and sell line. All right. And there's our notice. We got 15 minutes till the bell closes. So then we're going to trail until break even on that one. All right. Because then I like to flip it over and start trailing on the yellow dot. So we're going to come in. This is my buy one. Now I'm going to hit cancel. Get out your little camera because I'm going to show you my second one. All right. There you go. So there's the second one. Take your little camera out. Snap a picture of that one. Okay. And now we're going to put that one into our system, which is the same thing. It's just the sell side. All right. We're going to have a limit here and a limit there, a stop here and a limit there. Same thing. We're going to do the price bars and then we're going to trail until break even. All right. That's a day order. So we're going to hit cancel on that one. Now I'm going to do number 3. Let's come down here. I got a big list. I have to find it. There it is, 777. So this is the stop order version. Now this one leaves an open order until the market is triggered. So this is an OTO order. All right, one triggers other. So we can put a stop order in and then it will automatically trigger and activate the limit and the stop order. And then it'll start to jump on the price bars back. Once again, not on the little ATR. And then it will set the limit and the stop for you and automatically trail to break even. All right, so that's a neat little trick. So we'll show you that one. And then the last one down here, I'm going to right click on that. Ooh, a big list here, 777. And now I go ahead and take a picture of that one. You can see we got a stop order in here. And this time we're going to trail price bars back 1-to-1, price bars back. And we're going to do trail both directions. All right. We're going to trail for entry, going to trail for backwards. Now I mentioned the ATR. These are all price bars back because it's a little bit more aggressive when you do price bars back than it is the ATR. We can set up the ATR. That's just a different one in here. One of my other lists in here. All right. So I think, ATR, that might be the number 99 in there. Anyway, we're going to do 777, which is actually price bars back. So if that's the case, what we're going to do is let me, in the interest of time, we're just going to put one on. I think the market, it's giving us a little ABC pattern here. All right. This is a little ABC Fibonacci projection tool that which tells us we got some additional downside potential. Doesn't mean it can't go up because if you go from this side up to here, and now you got a little upside potential, and it could be a little up like this and back down to here and then turn and start to rally once again. All right. So you get your Fibonacci projections in here, but that's a little bit beyond the scope of this class. Those are just some tools you can use that help you identify where you think these markets are going to turn. And if you don't want to wait for a little yellow arrow, you can kind of get in the middle of the trend somewhere based on some of these other projections. So we're getting a red bar right here. Our first green candle to make a new high. We could get in for the long position, but this is the first red candle, but it's just a pullback candle. See how it's coming back and it's doing what I call a little spiky dikey do. It's coming in there and it's spiking that little yellow dot right there because there's a lot of guys that have their stop orders right there. So it likes to come back, stop everybody out, fill their orders only to have it take off and run once again. So that happens a lot. So we'll see. A lot of times guys will be buyers right there. They'll just buy right there on those little spiky dikey do's. All right. But you have to take a very small risk on those because that, it could also be a turnaround point. And that's just, a little game you play. It's part of the carnival game. Where do you think that bar is going to go next after the little red bar? Think it's going to continue down or you think it's going to turn around and start to go back up? We're going to get a short little red bars, 2 little red bars, and then a rally. If you think so, you can sit here. You can buy right in here. But we're going to use this one right here. All right. So we're going to come in and actually we have to wait for it to give us a, your timing on these programmed buttons have to be kind of correct because the market has to be making lower highs and lower lows or higher highs and higher lows before you can click the button. Otherwise, it puts the orders in the wrong spot. All right. They jump to the wrong place. You don't want that. No jumping to the wrong place. All right. So we need to have a higher low and then we can hit the buy market or a lower. We could do the downtrend right now. Let's do that one. Sell market. So if we think it's going to continue down, I'm going to click that and you'll notice that it immediately gets me into the short side. And then brings that, it sets that order, that stop order at 100, right? But immediately, because it's in, there's a higher low or a higher low, it jumps it to that last price bar. All right. So that now if the market will continue down, that trailing stop will trail down to the next high of that bar. And then until it gets to break even, and then it'll just stop at break even because we told it to stop at break even. And then that way the little yellow dot will flip to the other side. And if we want to, we could just hook it to the little yellow dot and then it'll trail down the little yellow dot. Hopefully we get a longer trade, and more money. All right. It's always about more money, more money. We want more money. All right, now you got your limit order down here. It's dropped in at 100 ticks, but you can put it anywhere you want. I like to come in here and say, well, I'm $186 from break even, from goofing off. I've lost 186. So see that number right there? I'll change that to 186. I like to do that. Some people say, don't do that, Len. You're just cutting your winners short. But I like to get my money back. Oh, I got stopped out again. Oh, look, it's getting ready to go. That's the 10-minute mark. Markets always take off and bounce all over the place on the 10-minute mark before the close. I always recommend people not be in the market on the 10-minute mark because it jumps all over the place and stops you out. Now it's turning around trying to go back up. Okay, it's going up. So we have a position here. We can come in here and hit our buy order. There you go. So now we got a buy order, one price bar back. It looks like it's on the yellow dot, but it's actually not. It's just the yellow dot happens to be about the same place as one bar back. So there we go. So it's jumping in there. The market's going. Now again, we're down 261. I can grab this, drag it down there to 261, put that right around 265. And if it goes up there, we'll get all our money back. All right. So then there's nothing for you to do. At this point, you could go to the bathroom or, go cook eggs or whatever you want. Go to the grocery store because it's going to handle everything for you. At this point, all you do is kind of kick back, relax, and you can't make the market go where you want. Now I try. I've got some magic that can make the market move. Did you know that? Watch this. This little guy right here. Oh, he's the wrong one. I got a red one that makes the market go down. This one here, this little guy makes the market go up. So if I come in here and I start stabbing him in the neck, that's the power I've got to make the market go up. I got all these little setups, these little strategies, the little buy signals, the little sell signals. But the one thing I can't do is once I get a buy signal, I can't make the market continue to move in my favor. And that's really frustrating to me. So I've tried to get some magic to make that happen. So this is my magic right here. Once I get a buy signal and I get into the market, I need it to move in my favor. And to move in my favor is up. And this little guy, he's supposed to make the market go up. And if he doesn't, I stab him in the neck like that, or I threaten him. I say, you make the market go up or else I'm going to stab you in the neck. This is the maximum amount of authority and power I have to make the market move in my favor once I get in. Once you get into the position, you can't make the market move. All right. All you can do is sit back and cross your fingers, hope it goes in the direction you want it to go. You get a little buy signal or a little sell signal. You take that buy signal, you put your positions in there, you protect your short side and anticipate the market goes up to the long side, you cross your fingers and you stab your little voodoo doll because that's the maximum amount of authority and power you've got of knowing where the market's going to go. Nobody knows where the market's going to go except for this guy right here. He knows. And that's why you stab him in the neck to try to make him make the market go where you want. All right. So how far is that market going to go? Well, it went right close and then we got stopped out. Just almost didn't quite make it to our $291, right? That's a little disappointing. So you could not put it up there quite so much. You could say, well, Len, okay, maybe I'm not going to try and make $291 all at one time. All right. Well, don't do that. Scoot it a little closer and say, I'll be happy with $100. Take the $100 off and wait for another setup, another trigger, and do it again. All right. Here we go. We're going to try and go up one more time. Okay, the little green bar, the flat bottom, we're going to go ahead and hit our buy market. There we go. We're stopped, one price bar back. Let's do that this time. Let's just see if it goes up and tests that previous high right up in there. We'll take it off. Now it's not as much money. It's only $85, but we can chip away at our $291. $85 here, $50 there, $100 here, $100 there. That's okay. Nothing wrong with that. All right. You don't have to get it all back at once. That's called get backitis. All right. So you don't need to get backitis. You can work on a little bit smaller moves, a little bit smaller trends. You can move your stop up a little bit more aggressive if you want to. You don't have to. If you want to move your stop up tighter, you say, "Oh, it's too far away, Lan. Oh no, it's too far away." What you can do is you can grab it and move it, and it's going to say, "Hey, wait a second. I'm controlling this stop. Do you want to control it yourself?" You say, "Yes, I want to do it myself." Okay, it lets you do it yourself. Then you can move that up by yourself. All right. Now you don't lose as much if it turns around and goes back against you. Of course, it could come back and turn around and go back up, stop you out, and then take off and go in your favor. But, that's the name of the carnival game. Just like that. Stopped us out. Now it takes off just like I said, right? That's a really common thing. So that's why you hold your stops where you do. And this market is just being choppy right here 5 minutes before the market. It's not trending at all. So we're not having a whole lot of luck here. Usually when you hit a certain level. Now, because our goal, I have some rules, all right? Risk and money management goals. My goal is $500 a day. So, and I'm pretty good at hitting $500 a day. I can hit $500 a day pretty consistently. I'm pretty good at hitting $500 a day. But sometimes I run into some bad luck just like anybody. I start throwing my darts at the balloons and, they bent the tip and I hit the balloon and it doesn't pop. Or I go and get my BB gun and start shooting it at the target and they bent the sights on me, right? We're playing a carnival game and we know that the odds are always against us. They're not in our favor. So we have to always work with that idea in mind, keeping in mind that everything is against us. And so we're going to go, and what we're going to do is sometimes we're going to lose. All right. You're going to have losing days. So I have a max loss. How much is my max loss? 2 days of income. That's it. If you ever lose 2 days of income, you have to stop, turn it off, and walk out the door and go golfing or something, go do something else. Because once you've lost 2 days of income, it's going to take you 2 days at $500 a piece to get it back. That's two 500s is $1,000. We're only at 346. We're only at 346. That's not a big deal because our max loss in a day of trading. Now we've only got 5 minutes left to go. And so it does suck that we're right here at the end of the day with $346 down, but we've been goofing off. We know, but we've not had a lot of luck either. The market, look at how choppy it is. It's been real choppy. So we probably wouldn't have made money even if we'd have been serious about what we were trying to do here. Maybe we wouldn't have lost as much, but we probably wouldn't have made anything either. We did have a couple of moves right here early. That was a beautiful move. If we'd have caught that one, even this one wasn't too bad. That was pretty good. We had a couple of little spiky dikey doos in here. We had one right there that would have caused us a little bit of anxiety. And here's another one right here. We might have caused a little anxiety. It might not have hit us. The first one wouldn't have because we'd have been up here. But the second one, that might have hit us. That probably hit us. So anyway, that's the anxiety. You get these little spiky dikey doos. And of course, especially if you're doing the price bars back, because you have to have nice little trends with flat bottoms to get price bar back. Let's go one more time. I'll show you how this one works. We come in here with the stop one, and I can place this stop just like that. Okay. Now it's going to sit there like that until that stop order is a continuation order, right? So if the market continues to rise and it hits that stop order, it's going to activate these two orders. This one has instructions that if you activate it, it will jump to the one price bar back, right? And it will, but only if this one gets filled. If this turns around and the market turns around and starts to fall, well, nothing happens. And it doesn't cost me anything to put this on. There's no commissions until that order gets filled. And now if this order doesn't get hit, you don't have to pay a commission on that one either. And if this order doesn't get hit, you don't have to pay a commission on that one. You only have to pay a commission on the ones that get filled. Now, right now, this is called an open order. All right. It's open order and it's not filled. It's waiting. It's a trigger order. It's one triggers other, not one cancels other. So it will trigger and turn on the limit order and turn on the market order. Now you can put the limit order down here. They will put it right there. It's still not active. It's just changed the location from 100 to wherever we wanted it. So that is sitting there. Now we can also have that trail. Now it's set to trail on the ATR. Watch this. I'll show you something really cool. Exit chart. And now we're going to come in here. We're going to drop that underneath. Now see, it's going to trail up on the little yellow dots for a short position. So it'll go up on the little yellow dots until the market turns around and crosses the little yellow dots, which is where a yellow arrow would come in, right? And then it would make money on the way down. So it's going to automatically move for you. So in this sense, you could actually do this and go cook eggs because it's going to get you into the market on a reversal and it's going to automatically drop the stop order to protect you, and it's going to automatically have the limit order down there at 100 ticks or $500. So you could just sit back. You don't have to do anything. There's nothing to do. You've already set it up. It's going to catch the reversal when the market turns and gives you a down arrow, and you're going to anticipate that the market's going to ride all the way down and give you $500, or it's going to stop you out one price bar back. That's how this is set up. So you can set these little tools up to do whatever you want. And what's really cool about it, we call it the software, is for the visual investor, because you like to visually see what the market's doing. And you can see where the little dots are. You can see where the reversal points are. You can see where your orders are sitting, and you can change anything right on the screen. You don't have to pull up the little dialog boxes. Well, sometimes they pop up. You have to have that one, but you can move these things around and put them wherever you want, and make them do whatever you want. The market's going to close here before our order is going to get filled. So see how that thing just keeps trailing up automatically behind the market? So you can play with that one. All right. See how it keeps moving with the little yellow dots? It's not filled. The more order hasn't been filled. There we go. Now it might fill right here. We're going to get a little turnaround right here. Nope. There's the market just closed. Now we're in the futures market. So the futures market actually stays open longer. Now we're going into what we call the after hours trading, right? Now in the stock market, if you go to after hours, the problem with after hours trading in the stock market that you're now stuck only being able to use limit orders in the stock market. But we're in the futures market. We don't do that to you. All right. Nothing changes. Just the volume, the amount of people who are trading, because the stock market out of Chicago on the NASDAQ, all those people stop trading right now because they don't want to go into the after hours and start trading only with limit orders. Well, we don't do that to you over here, but because we lost all those stock market people, the market slows way down over here in the futures market because there's not nearly as many traders. All right, now look and see how cool that was. It trailed that little yellow dot up. It automatically reversed the position, put you in. Oh, we got stopped out. And then it popped right back around and stopped us out. But that was a neat little tool, right? And we're in the after hours and there's not going to be much trading going on. You can put it in again. We can just try, right? Put that in. One price bar back. See if it's going to continue to fall here. And then you put your limit order in here. How much you want to make? Well, $376. You could drop that down and get my money back. Get back at us. 375, 370, we're at 376. We have to go 370, 380. So the market would have to drop all the way down to there to get your money back. And that's going to come down until break even, and that'll just sit there at break even. We can't even get to break even today. We need the market to move. Let's see if it'll move a little bit here in the after hours. I'll give it another 5 minutes. How's that? Little bit of time here in the after hours. Market's going to move a lot slower. Sometimes we see the market move quite aggressively, and oh, look at that. See, that's why I don't like to trade in the after hours, because the market does stupid things like that. It gets a little crazy, all right? Jumps all over because there's no volume, very little, few people are trading, and so the market can jump around a lot like that. That's why we don't trade in the after hours. You and I, as small speculators, we don't trade in the after hours. All right, guys, if you had fun and that was an interesting little lesson for you, how to get started trading in the futures market with track and trade and some of the tools that you can use. I know that we went a little bit fast. We started with, buy, sell. That's pretty simple. We started putting limit orders in there and stop orders in there, and then we went to the programmed windows. Now, I don't expect you to be able to do everything that I did here today immediately. I showed you a lot of advanced trading stuff that you can do with the orders and how to get that all stuff in there. Don't feel bad if you didn't quite catch it all. Just keep coming back and we'll just keep working it together and we'll make it happen for you, and you'll be able to start doing this on your own and you'll get better and better. It's just a video game. Remember, you just need to practice. Just need to practice. All right, I got a Sunday school lesson for you. All right, here's your Sunday school lesson. Plan your trade and trade your plan. Volatility is your friend. All right. Now, oftentimes you hear people say, oh, the market's too volatile. I don't want to trade that one. No, volatility is good. That's what causes these long moves in the market. It's the volatility. All right. If you don't have volatility, that's what causes this stuff where you just get lots of choppy stuff. All right. Up, downs, ups, down. You got one up for every down. The problem is you don't know how long each up and down is going to be. And the up and down sometimes just get really choppy and really small and short. And those are worthless. Nobody can trade that. Can't make money. You can do a little scalping, and we got some scalping strategies in here where you take maybe 5 ticks or something, but that's no fun. You want to do the scalp and trail. You want to get in, take 5 or 10 ticks, and then let the rest go, right? You want to catch these long moves in the market. And we were getting some of those back in here a little bit earlier. If I could click the mouse. See, back here, the market was giving us some of those better trends. And so we could make money in those. When the market's doing that, that's money making. All right. You can trade that. You can make a little money on that. But when it starts to get choppy, you want to stay away. Stay away. The biggest part about trading is not hard if the market's moving like this. I mean, if the market's moving like this, boy, you can make money. And here's a little chunky one that's not any fun. There's a good one, right? So if you can wait till the market's making those kinds of volatile moves, that's what volatility is, right? Oh, you can't see my screen. I hate it when I do that. So here's where you can see the market. So it was making nice little moves in here, one up for every down, and you can see the little moves in there, and those are nice moves. So you can make money on that. But then you can see where we got back in here, and then about right here, about where power hour started, the market just started to get really ugly, and so it wasn't really fun to trade right in here. All right, just little tiny moves. You just keep getting stopped out. Not good. Not good. So our biggest, trading isn't hard when the market's performing properly. You just click your button at the right zone where the flip from one side to the other, and you just let it ride all the way down and you take your profits. You do it again, you ride it all the way down and take your profits. All right. That's not hard. What's hard is for us as traders is to knowing when to stop trading, when not to trade. Because when the market just starts going sideways like this, and you got one up for every down, and you just get all these little ups and downs that are so tiny that you can't get your stops moved to break even, that's no fun. We got to be able to realize and recognize that, when not to try to trend trade. You can do a little scalping in here and try and get a little, 5 or 6 or 10 ticks, and that's okay. We got some scalping strategies we can play with. But to trend trade and to try and pick up a longer trend, look at this. The whole day was just kind of nasty. It didn't really trend at all. There, we got a little bit right here. When was this? Right around 7:45. Oh, first thing in the morning when the market opened. All right, so that's your market open. The market moved pretty nice in there. And then the rest of the day, it just kind of dawdled. Now, here did a couple nice little moves here at 8, quarter to 9, this mountain time. And then it just kind of dawdled the rest of the day. It just didn't do anything, did it? Just kind of died. Just kind of died on us. So there we got a few nice moves right in here. Started again. Right, 8:30, 8 o'clock. See, I always look at the top of the hour. I wait for the market to get to the top of the hour, and then I trade the first 5 or 10 minutes of the top of the hour. Every top of the hour, I'll check and see if it's going to start to move, because it has a tendency to move at the top of the hour. If it doesn't trade in the first 5, 10 minutes, I can't get into a trend. I just walk away and come back and do it again at the next top of the hour. And so that will give me a break, an hour to wait. Sometimes I'll not get into a trend and come back in an hour later, and I'm just like, oh, damn, look at that. Market really went wild for me. It should have stayed. But that happens more rare than not. And so usually at the top of the hour, you can get into a nice trend and let it trend. All right. And if you get stopped out, well, then stop trading. You don't have to trade all day long. Just make $500 and you're done. Walk away. Take your money and run away, because this market can take your money away a lot faster than you can make it. The odds are always against you. Always against you. Getting that big panda every day is oftentimes very difficult. All right, so if you catch your panda, walk away. And if you start losing money, walk away. If you get up like $300 and then you're like, well, I'm trying to make my 500, and you trade again, and oh, damn, now I lost $150 of my $300. That's it. Walk away. You're done. As soon as you lose 50% of your profit, you're done. Walk away. Walk away with 50% of your losses. Don't try and make it back. Don't get backitis. Don't try and win your profits back. All right. Volatility is your friend. Remember, when the market's moving hard and strong, lots of volatility. That's where you make money. That's where we as traders make money. We don't make money in these dead sideways markets. All right. Do you guys have any questions? I do have some other fun stuff for you, for those of you who have stuck around this long. How about this one?
Look, if you haven't subscribed to Pitt News Magazine yet, then I'm going to need to see you professionally, because you must have something wrong with your brain.
All right, Pitt News Magazine. You guys all need to run over and get a copy of Pitt News Magazine, because that's where we have all of our, everything that we do in these markets. We teach all these lessons because we're part of the university class, right? And then I take all this stuff and I turn it into articles and lessons, and I have other people help me write articles and lessons, and we create a magazine. And so all this stuff, you're like, Lan, did you write this down anywhere? Where did you write this down? Well, I do have a book. You can get it on Amazon. Just search Lan H. Turner. It has all this stuff written down in my book. But you also subscribe to Pitt News Magazine. The book, I had to eventually stop writing it, right, and publish it. And now there's all this other stuff that I want to tell you. Well, that all comes out in Pitt News Magazine. It's only $39 for a whole year. I mean, amazing amount of stuff. And every article is recorded. So you can just listen to it. You don't even have to read it. You can just listen to it. And then you got all the notes. You can always refer back to it and say, oh, I remember listening to that. I want to go and read the article. So it's more than just a podcast, because, podcasts, you listen to them, and you're like, oh, damn, I wish I could remember that. But you don't have any written word. So with this, you write it. It's an article. It's a audio magazine where you still have all of your articles and you can refer back to them at any point. All right. And of course, we got Claire and her podcast. All right. So Pitt News has a podcast, and Claire's the one who does the podcast. So we'll let her tell you about that.
Hey, Claire here. Guess what? Mr. Turner handed me the mic. I've now got my very own podcast, Pitt News on Air, your new weekly hit from Pitt News Magazine. Join me every Wednesday for stories, interviews, and a little behind-the-scenes scoop. We're live on Spotify, and yep, now on Apple Podcasts, too. Visit pittnews.com to follow. Come hang out with me and the gang. We're all there. Jake and Lena, of course, Lan Turner, David Duty, Dr. Scott Brown, Jordan Black, and even Aiden shows up on occasion. We're having a world of fun. Don't miss out. Pitt News on Air. Because news should never be boring. It's where your trading friends are. Follow us wherever you get your podcasts.
All right. So there's Claire, and she is inviting you to join her podcast. If you want to join her podcast, it's free. It's not the $39.95 is for the magazine, but Claire's podcast is free. You can get that. Just go over to pittnews.com. She'll give you a link. You click on, it takes you over to Spotify where you can sign up for it. Of course, the podcast goes out on Apple, like she said, and it also shows up on YouTube. She didn't mention that in the ad because she made the ad before it started going to YouTube. But it's also on YouTube now too. So it's on the YouTube channel where, the same channel that you got this video on. So you can go and listen to Claire's podcasts. She started to do some solo podcasts, so you can listen to those. Those are usually short, 3, 4, 5 minute long ones, but they're fun to listen to. And then, of course, she does the longer ones every Wednesday. All right, so that's all I got for you today, guys. I hope you had fun. I enjoyed this. I look forward all week long to come along and do this with you. So hopefully you'll come back, subscribe if you haven't. Hit the little thumbs up if that is something that you felt like you learned anything today and it's worthwhile. And we'd like to see you again next week. And, of course, you can always join us tomorrow morning at 8 a.m. Mountain Standard Time. And we're going to go through, and we've got a bunch of options on right now. We're going to go take a look at our options. We're going to see if we can't get the bull call spreads to work. Had a little problem putting some of those on last Tuesday, but we're going to try it again. We'll take a look at our portfolio and see what we got going, and then we'll look at the UBI portfolio. All right, guys, we'll see you tomorrow morning, bright and early, 8 a.m. All right. Jay says he picked up Canvas 39, did the train on rails thing, and looks like it turned out pretty well for you. Good. I'm glad that worked for you, Jay. It's always good to hear when a plan comes together, right? All right. We'll see you guys tomorrow.
All right. That wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.